Hey, what's up? What's good? What's happening? This is Bahle from 777FX. I still don't have an intro. I should write up one. But today I'm just coming with something different than the usual. Well, not really different. I'm doing an update on a certain video I did. I did have a video on my channel. Let me see. I did have a video on my channel that was actually that was explaining my strategy, right? So I have a Nasdaq intraday strategy. So I did have a video on the intraday strategy. I did break it down. I did explain the 50 EMA. I did explain exactly how I trade, and my trading has changed not a lot from exactly what I had back then, but it's like modified and better. Just the differences, the small differences are I still keep the EMA, but like I'll show you guys how to trade the EMA, and I was using hourly zones, like I was using hourly supply and demand zones, hourly order blocks. Now I'm using 4 hour order blocks, and I'm sometimes using the daily even. You feel me? Now I understand more exactly on exactly like how many. What can I say? Like understand how price reacts within certain zones. So like let me just get down to it so you guys can know, but let me just go back to the video. This is my YouTube, but I'm pretty sure you're on my YouTube, so you know which one was the video. I'll leave it in the description. But there's it. Yeah, there's it. The Nasdaq intraday strategy. 30 minutes. I'll probably be able to fit it in less than that. So yeah, this is me just backtesting Nasdaq. So let's just remove everything. Okay, so let me get my book. So I already have notes on this. So I'm just going to read the notes and explain. So first of all, it's our I don't have a name for it as yet. Just Nasdaq trading strategy. What is the system based on? We are based on three things mainly. We're based on supply and demand, time frames, and market structure. So supply and demand, we basically trade what moves the markets because we understand that what moves the markets is the supply and demand zone, the imbalances between the buy and the sell orders. When there are more buy orders and sell orders within the market at a specific time, right, then price will take up, and if there are more sell orders than buy orders within the market at a specific time, price will tick down. That's basically it. My pen is not working. Okay, and we use the time frames. We understand that a component of the market structure, but we don't understand a component of the market is time. A huge component of it is time, so we use time to our benefit. So multiple time frame confluences help us to get the highest probability setup, and yeah, so we use the different time frames to get the best setups. And market structure. We use structure to position ourselves within the markets. So by market structure, I mean like how price is moving. Is it making higher highs, higher lows? You know what I'm saying? Is it consolidating? Is it trending up? Is it trending downwards? You feel me? All that shit. Is it like wicking? Is it rejection? Is it reaching? All these things we use. Okay, so that's basically it. So let me just break down the system for you guys. So we first the time frames we use are we use actually all of these time frames accordingly, but more specifically we use the daily, for our hourly, and the 15 minute. The reason why I have the monthly and the weekly here is we use the monthly. I'll explain later on. The monthly and the weekly, they are they are like a key component, but they're not really as as important as these four. So we use the daily and 4 hour to find our supply and demand zones. Right, we read that those are our macro time frames. By macro big, macro small. So if you see me referring like macro time frame, macro zone, big time frame, big zone, micro time frame, micro zone, or micro entry, small zone, small entry, small time frame, small zone, small like entry candlestick, whatever. We'll see. Yeah, we use those time frames. Okay, so basically, for our daily macro, 50 minute hourly micro. For our and daily, we find our supply and demand zones in which broke structure. Let's not forget that. So an order block or a supply, and I'm just going to use supply and demand. What makes a supply and demand zone a supply and demand zone is the fact that it broke structure. So we see that this order block or supply and demand zone right here was created, and it did break this previous low right here, and I'm pretty sure it did break previous structure too, but like it did break this previous low. And then we also use the fact that we understand, look at how impulsive this move downwards is, meaning we understand the fact that there's like a lot of pressure at that zone, but that's another story. So we understand that, okay, cool. As soon as this zone was created in the block structure, this was a valid order block. So it's valid supply or demand zone, supply zone in this fact. We use 4 hour, we use daily. 4 hour actually key, right? So we use 4 hour and daily, but our key time frame is the 4 hour. Like we use like most of the time, okay, like out of 10, let's say seven times out of 10, we'll use 4 hour zones only. Daily zones, sometimes we'll use them, but we also use the daily because now you can find like maybe a daily zone and then like a 4 hour zone within the daily zone, you feel me? And then that's basically like our macro zone. So they intertwine and like interrelate. And then our hourly 50 minute, our hourly is mainly to just like our hourly is actually for the ID50 setup first of all, but that's another how you. Or I also use the EMA. It's called an ID50, but we'll get into that in the later part. And we use the hourly to like monitor whenever we're in trades or whenever market is moving. We don't want to look at it on the 50 minute. We also don't want to look at a too high too high of a time frame like the 4 hour. So our hourly is like our intermediate, like middle time frame, which we monitor. So if we're within price, we're looking at the 50 minute and the hourly more or less. If you feel me. So yeah, the 50 minute is our entry time frame. We don't enter on any other time frame, but the 50 minute, we we only get like, we don't really move down to lower time frames like 5 minutes or so. It's like forcing it. So we use 15 minute, guys. So yeah, that's it. So let me just break it down using this simple trade right here. We understand that market did actually break structure, right? So this fall zone was created that broke previous structure over here, which is a valid supply zone. Um, Valid supply zone. Where's this thing? Hide. And what's this? Yeah. Okay, so we've marked our supply zone on the 4 hour, which is a valid zone. It did break previous structure, and then uh, we go down to the hourly to just observe, but we go down to 15 minutes to find an entry. So we okay. I probably skipped a lot. So yeah, we use the daily 4 hour, 1 hour, and 15 minute time frames. We find supply or demand zones in the direction of trend. Daily and 4 hour are macro zones. 1 hour and 15 minute are micro entries. Yeah. Supply or demand zone must be marked and formed on the macro time frames key rule. Supply or demand zone must break previous structure key rule. Await first retest of zone. We only trade the first retest. Once price is within macro zone, find 50 minute entry signal. We enter off a rejection candle, pin bar, engulfing. So rejection, wicks to the, like a lot of wicks that's rejecting. Or we see like a long ass wick rejecting. Pin bar, easy. I hope y'all know what a pin bar is. Oh my god. What can I use? This is a pin bar. Here's a pin bar, guys. Here's a pin bar right here. Oh, boom, boom. But here's a pin bar. This candle right here. This is a pin bar to the downside. Long wick to the upside. The body closes below 50% and gives us this like full body candle. Let me find another pin bar. Let me find a bullish one though. This is a bullish pin bar. Yes, this is a bullish pin bar. As you can see, rejection candle. Price closes above 50% of the zone, gives a full candle. You feel me? So that's actually what a pin bar is. Engulfing candle. This is an engulfing candle. This is an engulfing candle. This pin bar is also an engulfing candle. This is an engulfing candle. This is an engulfing candle. A candle that just totally engulfs the previous candle. It's good when it like goes twice or more, but like an engulfing candle. So even if it engulfs the wick, just like this one, it didn't even like engulf it like this one. This one like at least like moved up two of these candles here, but this one didn't. It just broke this low and engulfed it. So that's what we used, and that's basically our entries. Oh, hope you guys listen to piano. I really like to play piano and music, just house when I'm backtesting trading. Stops depend on structure and risk appetite, depending on you. I advise you to risk less than 1% or 1% of your account. Targets depend on market structure and macro bias. By macro bias, I mean like, let's say we get a sell and we understand, just like this sell right here. Let's say we get this sell and we understand the price is bearish. We will hold it longer for then. My usual target is 100 pips. Just like minimum target, we will hold it longer for 100 pips because we understand what you know. It's in the direction of price, so it might give us more. So yeah, basically, anything else? No. Do I have anything to put in extra? I did want to say something. I'm not gonna lie. I really did want to say something, but I'll probably remember. So, oh yeah. The extra. We use monthly to we use monthly to determine bias. So we look at the monthly to determine if we're bullish or bearish. We observe weekly candle formations. Yes, we strongly observe daily candle closures and formations. We prefer taking trades in the deeper half of the zone. I'll explain that. And you will take at least 2 to 3 losses within the zone before getting the ideal entry. So risk accordingly. By that I mean like backtesting the strategy. You will find out exactly what I mean. But let's just see here. By that I mean guys like what can I say like whenever price goes in within a zone, I've noticed from backtesting constantly and trading, the like we won't get a first perfect entry. We might at least take like 2 3 losses trying to enter. Like you see price comes up, let's say there's an engulfing candle here, we enter, stops a bit above, it drops low, comes out, takes us out, and then we enter again and then it goes our way. Or even like 3 times, we might do that 3 or 4 3 times and then start dropping in the deeper half. The deeper half is like the top half. So if it's a supply zone, this is the deeper half. If it's a demand zone, this is the deeper half. You feel me? But the more I backtest, you guys will understand what I mean. But let's just enter. So there's it. 15 minute. It close up. Boom. Gave us a rejection candle. You feel me? We wouldn't have entered at this one. We would have entered at this one because it did engulf this candle over here. And boom. Um, first entry. Eyeball. First entry. Stops accordingly, remember. So you might have placed the stops above here, 30 40 pips, which I would have placed too. And our target would have been like a beautiful target because it would have been at least like 300 pips or so. But it's just placed a gem, and then boom, price dropped a little bit, took us out. Cool. First entry, first L, 40 pips and max. Hope, hoping you're risking less than 1%, you don't blow your account. Hoping. So excuse me. And then we get second entry. Boom. All right. It gives us bullish, bearish candle, bearish like indecision candle, like a doji type. Then engulfing candle that engulfs the doji, breaks all these lows. We enter. We enter after engulfing candle. We place stops 30 40 pips above, dependence on you. TP way below. That's our strategy, guys. So let's use the demand zone. I'm running out of time, but let's use the demand zone just and just to like just and just to let's use this one. Let's use this demand zone. This demand zone is not in this in the direction of price since price is bearish. But we do understand that this 4 hour demand zone right here did break this previous structure, this previous high. So it is a valid zone. So we do mark it out. We mark from base to extreme. So even if it's a supply zone, we mark from the base to extreme. So from the supply zone, base, extreme. You feel me? So we understand. Boom, price came back down, and then what we do is we use the replay bar tool at this point. Now we understand. Okay, cool. Price is at this Price is right here. We're looking for a retest in here, a move up. We go in the hourly. Now we await. Oh, a key thing to put also is we only trade two sessions. We only trade London and New York. I've noticed like Asia, I hate it. The volatility is insane because it's like so low, and it usually goes against like my analysis, or I don't know if it's my strategy or what, but like I don't trade Asia at all. So what time is it? This is NY, so we're good for an entry. So remember, key rule: we only trade Asia, we only trade London and New York. So for South Africans, we only trade between 8ish 9 to about midnight. Yeah, that's our trading because London, because Asia, I'm running out of time because Asia is between 12 and 8 or 9, and then London is between 8 or 9 to around 2 3. Then New York is between 3 to around midnight. So now we're within the zone. We look for a 15-minute candle. Still not the candle we want. There's the candle. So we understand that price did come up here, give us a bullish candle, and then engulf this candle right here, but also gave us like a nah. We enter like, as you guys can see, like it's, you feel me? It's not an ideal entry signal. I'm not gonna lie to you. It's not an ideal entry signal, but we do understand that it's a first retest of a strong quote unquote supply zone, demand zone. Sorry, and we did get a rejection. Like we did get an engulfing candle out. So I've never backtested the zone, so I don't know what I'm doing. We know it goes up because we saw it. 50 pips since yeah, well, and then our target is 100 pips or this high right here. And we wait for price might take us out. There's it. There's it. Okay. Yeah. So that happened right there. We were. This was gorgeous actually. So I've showed you demand zone. I've showed you supply zone, and I've showed you demand zone. So that's my strategy. So now let me break down the ID50. The ID50 is very simple, guys. The ID50, we use one indicator, which is the EMA 50. The 50 EMA, it's in light blue. It's not like a must. I just like light blue. Um, um, yeah, we only use this on the hourly and the 50-minute. We await break below EMA. We got a break below the EMA. We await break of previous structure, as this is a trending EMA, so like we use it for trending price. We see break of structure. We await retest of EMA on 1 hour. So let's await retest. Let's await retest. Sorry. Um, So yeah, we are aware retest of EMA, right? Once prices at EMA, we switch to 15 minutes to find entry, rejection candle, pinball, engulfing, almost the same. And then we stop depending on market structure and risk appetite, target dependent on market structure and higher time frame buys. Can trade as many retests, like if retest like 3 or 4 times doesn't matter, but we like the first one. So came back, price broke previous structure, broke below EMA, came back 50 EMA, we go 15 minute, we find we find so I like to like usually put a line there to show where the EMA is. So and we wait for engulfing ish. This engulfing was not bad. So we wait for engulfing. What is it? It's 1 a.m. Fuck. Okay, I don't have a proper like one to show you guys. So our TP stop loss 50 pips or so. TP below previous low, guys, as you guys can see. And yeah, that's basically the EMA. But like I don't have enough time to show you guys. But that's basically the EMA. So now just test this out, back test this. Tell me what you think about it. But that's it. For me, this by the 777 FX, that was a gem drop. My strategy, the one that's gonna make me a billionaire. So I hope it makes you a billionaire or at least a millionaire. This is me signing out. Peace.